Welcome back. You're still tuned into Markets Today on CNBC-TV18. Let's track the rest of the headlines that we are going to be bringing for you. To the fourth headline today, several mid-cap financials scaled to 52-week highs after positive commentary and a strong business update for the sector's major players improved sentiment. In stock-specific news, M&M Financial gained 5% after its business update for November that shows that NPA stress is reducing. Abhishek Kothari is here with more.
Well, to begin with, the November business update of M&M Finance did mention that they had a monthly disbursements of 4,500 crore, which is a decline of more than 14% on a month-on-month basis. So in last 7 quarters, this is the highest rate of decline that you are seeing. But on the positive side, the collection efficiency was robust, coming in at 96% when compared to 91% in the previous month. The gross NPA ratio has remained stable at around 7% level for November when compared to 7% in October, and this compares to about 6.7% for the month of September. In that, the stage 2 or the loans due between 60 days to 90 days has actually seen an improvement on month-on-month basis. So analysts remain bullish on the stock. CLSA has written a note on M&M Finance. They have a buy recommendation and a target price of 260 per share. They say that the disbursal tractions remain healthy and collections were strong. The stage 2 has improved with stage 3 loans remaining stable. So management expects both to improve in the month of December or by Q3 FY23 due to seasonality. The only negative surprise which CLSA mentioned could be on the net interest margin or on the operating expenses side. Morgan Stanley has also written a note on M&M Finance with an overweight rating and a target price of 275 per share. They say that disbursements and collections have remained strong in November, aided by the fact that there were macro tailwinds which the management has highlighted. So collection efficiency in the month of November rose both month-on-month and year-on-year, and with asset quality remaining stable, they remain positive on the stock. Back to you.
Okay, Abhishek, but stay with us. Gold finance companies also were in focus today. This is on the back of a positive brokerage commentary. Give us more details.
So for Manappuram, they have an overweight rating with a target price of 150 per share, which is an increase of about 25.6% compared to Friday's closing price. And they have initiated on Muthoot Finance with an equal weight rating, a target price of 1,150, which is an upside of 1.25% compared to Friday's closing price. They say that gold lending business has been very good with a super normal ROE but low growth, given the fact that there is competition from the banks. So diversification is the way out. Manappuram looks better positioned than Muthoot Finance due to cyclicality and structurally. They believe that valuation multiples are also attractive for Manappuram. Back to you.
All right, that's all the update from the financial space, but let's move on to the fifth headline. LTI Mindtree shares listed on exchanges today and are now available for trading. The stock closed lower in trade. Reema Tendulkar is here with more details. Reema.
Thanks so much for that. So LTI will now be called LTI Mindtree, and the ticker, instead of being LTI, will be LTIM. Now, what has changed? Everything about the merger was known. But if you remember, the swap ratio told you if you have 100 shares of Mindtree, you will get 73 shares of LTI. So now those extra shares of LTI Mindtree will now be available for trading. So if I had Mindtree shares, I will now in my account have those LTI shares post the swap ratio. So this share base has gotten expanded. So that's the only change which has happened. There was not expected to be any big stock price impact because all of it was priced in. What's the merged entity looking like? It's the 6th largest Indian IT company by way of revenues. The annualized revenue run rate, if you annualize the Q2 revenues, should be in excess of $4 billion. It emerges as the 5th largest IT company by market capitalization, with a market cap which is closer to 1.5 lakh crores. It overtakes Tech Mahindra as well. The portfolios of the two companies are seen fairly complementary. The company, in an interview to us just last month, said that the two companies together would have more than 700 clients, but only 10 to 12 of them are overlapping. What's the risk per se? One is expensive valuations, especially compared to the other large cap peers as well as the mid cap peers. It trades at close to 30 times forward multiple, and some shareholders will be holding LTI as well as Mindtree. Now you're going to be getting a lot more shares of only one entity. So suppose you don't want it, there is always that risk of that excess supply getting sold into the market. Back to you.
Reema, thank you so much for all those details. One more stock in focus, Angel One, lost close to 5% after client additions and market share fell in November. Surbhi Sadaria is here to give us a sense of what's going on. Over to you, Surbhi.
Angel One has released their November business update and it's a weak set of numbers. Their gross client acquisition was down in third consecutive month. It was down 6% on a month-on-month basis. Their number of orders were marginally up, but this is mainly because there were higher number of trading days this month compared to the previous. They have seen a significant drop in the client funding book as well. The client funding book was down 18% on a month-on-month basis at 1292 crores versus 1575 crores in the previous month. It has lost market shares across all segments, F&O, equity, cash and commodity. First time in 7 months, it has lost market share in the commodity segment. It is down 210 basis points at 51.3% versus 53.4% in the previous month.
Okay, thank you, Surbhi, for that. Moving on, the Shriram Group has formally announced the structure of the merged entity. Remember, promoter company Shriram Capital and SME lender Shriram City Union were merged into the group's flagship Shriram Transport effective April. Lata Venkatesh is here with the key announcements today and some leads about the story henceforth.
Well, the listing of the new share, that is Shriram Transport, which is now being called Shriram Finance, will happen to reflect the merger in 2 weeks. That's the key that we got, and the major appointments. All the appointments also are on expected lines, or as pre-announced lines. Vice Chairman will be Mr. Umesh Revankar, who was formerly heading Shriram Transport, and Mr. Y.S. Chakravarti, who was heading Shriram City Union, will be the Managing Director and CEO of the new company. He gets a 3-year term. Those are the formal announcements come today. But effectively what this means is that the second largest NBFC is born. You know, their total AUM, if you put Shriram City Union and Transport together, it's about 1.7 lakh crore. And Bajaj Finance, if you only take their retail book, will be about 1.8 lakh crore. So a fairly important giant has emerged. Now, what do the company sources say about the merger? They spoke to us after the press conference, and they say that the merger cost in terms of duties was about 200 crore and another 400-500 crore in terms of other expenses. But the gain will be that now the merged entity will get Shriram Transport's rating, which is AA+. Shriram City Union did not have that rating. So overall, the cost of funds will be an advantage. They don't see any impact of the rise in rates in the market on them in terms of their margins, indicating they probably can pass it on. They see a lot of synergy, of course, in terms of people in Shriram City Union being able to sell transport loans, or both entities being able to sell more kinds of loans to the same clientele. That's where they see synergies coming. And, the product question to them is whether now that you don't have, any large one single conglomerate holding you, will there be any talks of being a bank? These sources brushed aside the question, saying that discussions are always there in the board about many things, but they intend to operate as an NBFC because they are better able to serve peripheral areas. The other big question, of course, is that Piramal Enterprises, which is now a big NBFC in its own right, has publicly stated that it wants to exit Shriram Group. So the management sources that spoke to us said that they are talking to a lot of people, to funds, and they see a lot of interest, so they don't see it as a major overhang.
Lata, thank you so much for joining us and explaining to us what the new merged entity would look like. It's time to put spotlight on the stocks that remain in headlines today. Hudson Agro and Exchange Dilip Bilkon. Vaishta is here to give us the latest.
Well, thanks for that. Hudson Agro Products is the first stock that I'm going to be talking about, which is in news today and has raised 302 crores via the rights issue, where the issue price is fixed at 419 rupees per share and the record date is 8th of December. The rights entitlement ratio is fixed at 1 rights equity share for every 30 shares which are held by the shareholders. Moving on to Ion Exchange, wherein the company has been awarded a contract by the Indian Oil Corporation, and this is for designing, engineering, manufacturing, supply, commissioning and operation and maintenance. This is for a period of 5 years of zero liquid discharge plant at their Panipat refinery. The contract value is fixed at approximately 350 crores and the project is to be commissioned within a span of 16 months. The next stock is Dilip Bilkon, which has executed a contract agreement with the Gujarat Metro Rail Corporation. This is for the construction of the Corridor 2 of the phase 1 of the Surat Metro Rail project, wherein the project cost is 700 crores. Back to you.
Thank you, Vaishta, for joining us and telling us what happened in these broader market stocks today. And with that, it's a wrap on this edition of Markets Today. Thank you for watching.